What's going on, everybody? Brenton here with another video. I just want to first off say Merry Christmas to everybody. I hope you're having a great day with you and your families. And I wanted to do a quick recap for today's market session. The really important thing today, you guys, is that what happens during holidays is really essential for market price. So what happens during these sessions when holidays are having the experience of no volatility, when we see that market starts to have another impact and market starts to go into a direction, we're going to see a lot of momentum. And days like this, where obviously there's not a lot of volatility and where there's price not moving really essentially at all, because it's not just United States that celebrates Christmas, but other countries as well. We see that price isn't going to be moving right now. So it's a great time for us to be able to do our speculations, do our analysis for the week, and be able to get everything ready to go for the rest of the week to get started, because we're going to see a little bit of more movement until the end of this year. So once again, you guys, Merry Christmas from the Traders Profit Club, and we're going to get right to it. So what we're going to talk about today is the USD Japanese yen, because one of the most essential pairs that we trade in the Forex market, or I trade in the Forex market, is the US dollar Japanese yen. I traded this pair a couple of years ago, and ever since that I found and backtested their charts, I've really loved the way that it works. So I've really just caught onto this chart a long time ago, and I just really love how it works. So today we're going to be looking at specific factors of how the US dollar Japanese yen is going to go into place and how we're going to see market predictions fall out for 2019. Okay, so I settled a document out for you guys. I did a little bit of research for you. So we're going to look over that first before we get into the charts. And after we get with this fundamental analysis, we're going to go straight into the charts itself. So what we like to do is look at these things called the BEA accounts, right? So the BEA accounts is essentially what most investors are looking for, right? Most companies, hedge funds, institutions, they take into consideration mostly these essential data reports that come out of the market, okay? And the reason why that this is the most essential data reports is because they have the most the most revenue, I would say, right? They have metropolitan cities, you have the great gross domestic product, right? You got personal incomes, you got U.S. balance and payments, international transactions, which has to do with the central reserve as well, having those balance that are balanced, right? International trade, goods and services, which is a huge one, and we're going to look over how China and the United States tariff is going to take into consideration as well, and then we have gross domestic product for metropolitan areas, right? And then personal consumption, which is a very key factor. So a lot of these statistical data come out right per quarter, and what happens is that once we take into consideration all these statistical reports that come out in every single quarter, then we revalue it. And then there's also something that we take into consideration is the high inflation, or what is the inflation to the average citizen per dollar, right? So then once that is established, and we have the central bank, what the central bank does is that they take into consideration what we need to do to be able to fluctuate price, so we're not having high levels of inflation, so we're obviously getting so our dollar is actually worth something, right? So times like this, when the dollar is going to have a minor I would like to say a retracement, this happens a lot of the time just because market prices get a little high, especially with Donald Trump having over $872 billion in military funds. We obviously had super high stock prices this year. We have had a lot of momentum and a lot of stimulation of this economy. But the thing is that the sustainability has to be factored on what we produce and what we are giving, not just what debt are we trying to keep on accumulating in our economic structure, right? So this is a huge one on why I see that the market is going down into the going to the downside for probably until I want to say March and April of next year. Might be a little later. We're going to see probably a retracement, and we're going to go over technical analysis showing you guys that. Before I go into that, I want to make sure that you guys understand there's the statistical data that comes out of these institutions are very high impacting on what the market price will do, okay? So we're going to take into consideration that the US dollar is the most popular currency. 64% of all central bank foreign exchange reserves and relative strength, the US economy supports the value of its currency. It's the reason the dollar is most powerful currency. It has 580 billion in US bills are used outside the country. That's 65% of all dollars. That includes 75% of $100 bills, 55% of $50 bills, and 60% of $20 bills, right? So the dollar is very, very highly favored overall in the universal markets, right? So the reason for the interest spikes, we need to do it quarterly, or reason why we were doing speeding up the interest rate spikes is because we're going to have what we called a drawback stage. So what happens is that after we stimulate the economy for a certain amount of time, the economy has to go into a drawback stage because we can't obviously overstimulate, because then we're going to have overgrowth of everything that's been going on in our economy, and it won't be able to keep itself going, right? It's just like if a runner were to run at a certain speed and he didn't pace himself, he's gonna get tired, right? And then he's just gonna collapse. So same thing is that for the economy to stay healthy, we need to be able to establish a pace, and this pace has to be regulated by these things called the central banks, which is the interest rates is what we establish. So a big measure of what we're going to be looking for due to the United States dollar going to the downside is, one, the federal chairman's obviously having that stimulation with Donald Trump. It's not really that big of a deal, you guys. It's more so propaganda than it is actually going to affect the dollar. But we have to take into consideration, if Donald Trump is having some type of altercation with any of the Fed chairmen, right? The central banks, right, are the funders of the government, which is funding all of really the money that we need to be able to stimulate our economy and keep on growing. So if we do have these, problems in the near future and something comes up, right, in the next couple months or the next couple weeks, Donald Trump is a very aggressive guy. He likes to get things done. We could see something, come out the news that will be very, very impactful. So for the US dollar as well. So what we want to do, you guys, is make sure that we're keeping ourselves. And Merry Christmas, Michael. Great to see you. And Merry Christmas, Toys NYC. Good to see you guys. Really great to see you guys. So what we want to see, you guys, is that if the market does have this correction and the price decides to be in not destructive, but a downsizing, we want to be able to profit off that, right? So we're going to go into price, and from there, I'll show you exactly what I mean by having this be correlated on how market price is going to be valued as of the daily time frame. Okay, so as we can see, that market price when Donald Trump was elected was into this area, which was around, we had 102,500. okay, and then we had that spike to the upside, and which basically we're going off Donald Trump's going to do this, he's going to do that. So everybody was basically like putting out IOUs, right? They're basically leveraging capital. They're leveraging a lot of things because they were wanting to stimulate, right? This is called a stimulation factor. This is what a lot of investment bankers, they put a lot of money into the market. A lot of hedge funds, a lot of institutions, they put a lot of money into the market, right? So obviously this is a straight run up to the upside. Really, really impactful, right? So when this was accumulated, right, we got into an understanding that price has been propped up, right? Price has been propped up, and it's kind of like how Bitcoin was propped up. We had people buying over and over and over again constantly, right? But the thing about propping up price is that without a steady growth factor, the market cannot sustain that. Just like anything with life, if it's not sustainable, it's going to have, right, a retracement, or it's going to have a downfall. It's just how the universe works, right? So what we want to use is that because that these market factors were put into consideration, right? And we got to understand that we stimulated the economy very much so since 2012, right? We put ourselves in a deficit, and the deficit itself is what establishes exposure for our economy, right? It weakens our economy because we're not able to define things as our own, and we're not able to have that structure, right? It's basically having you're being spoon-fed, right? The price is being spoon-fed and the economy is growing, right? But at the same time, what happens when we take away all that, right? Are we going to be able to sustain the high volatility that we have been for the last couple of years? So that's what I mean by when this deficit stimulate economy, not to keep it going and going and going and going, because at the end of the day, no economy in the history has been able to keep on stimulating their economy for that long without crashing and obviously, going into a depression, right? So what we want to see is that since Donald Trump was elected, right, we had that high, right? And then we keep on seeing higher stock prices. We see lower, the record-breaking unemployment. We see house prices rising. We see a lot of great data coming out of the statistical, right? We talked about the BEA accounts, right? We saw a lot of statistical data come out really good this year. We saw a lot of statistical data come out really good this year. But at the same time, we see the dollar, right? We see the dollar start to have a downside momentum. So the other thing that we use, you guys, is called treasury bonds, right? So the reason why we use treasury bonds to assemble or establish if the dollar is strengthened is because the 10-year treasury bond, or you can call it 10-year treasury yield, is basically what essentially is going to show you where market price will be and how much power does the dollar have behind it, right? So I want to talk to you guys about the treasury note and how it works, okay? So a rising yield is a dollar bullish, okay? So if you have a rising yield, right, that means that the dollar is going to go higher, right? But a falling yield, it means the dollar consumers, making it harder for the economy to stay healthy due to high debt consumption and possible 2 more interest spikes will obviously tip the economy into having a desperate value, not being able to sustain the dollar's value, right? It's going to have a correction, because when we have a stimulation and then we also have a treasury, we have the 10-year treasury note, but the treasury note is not essentially going to be able to show that we're still in a bullish dollar, right? And still of a strong dollar. It's going to have a market, what we call a lethargic market, right? Meaning that the stimulation of that treasury bond is not going to be able to increase, even though that we see record-breaking prices, is because that the two aren't compatible, right? So that is a big thing, and when price comes into understanding this, we're going to be able to deliver. So Michael Jones, is there a USD S&P cross pair or USD cross pairs to trade against the market as a whole? Yeah, so the dollar index you can obviously cross pair, but there isn't a US dollar S&P cross pair as of now. There isn't one to do that. But you can obviously trade just the dollar index and the SPY. So you can trade them obviously themselves, but you can't cross pair them. So the prime example for a bull market turnover, people want to still have hope, right? The economy is thriving because of positive data that's been coming out, yet that's backing all these positive statistics besides heavy amounts of debt consumption and leverage, okay? So the leverage that's been established is an example of a bull market turnover. And we talked about this chart, right, yesterday. I'm so big on this chart. I'll obviously have this. I'm going to have this probably on every single live stream, is that this chart is a perfect example of how the 2008 financial crisis went into establish, right? The dollar influence, how the dollar influence affects the world economy, right? Using the foreign exchange market helps guide the dollar activity in a very precise way, you guys. So this is obviously more of the statistical and fundamental data that comes out for the dollar. Reason why I'm going into this right now is because price, obviously you can always predict things through price and technical analysis, but it's good to have another side note of how things are working, right? Having that fundamental analysis is a key element onto having a bigger picture, right? And because sometimes when these data reports come out, price can be looking a certain way and then it would drop really quickly. So it's just good to stay on top of these things, because when price does move in a certain area, we understand why it's doing that. It's not just doing it for no reason. And it's always the worst feeling when you're trading and then out of nowhere you have like a 400 pip drop to the downside out of nowhere, and we don't know why, right? So this is like a really big understanding of why prices and fundamental data is so key for trading the markets and having that structure as well. So we're going to go into the technical analysis part, you guys, and go into where we left off. So first, I want to show you guys something that has been very, very awesome to establish actually in my paradigm. So what I've been able to understand is that market price moves, and essentially there's these 1,000 pip intervals or 1,000 pip structures, right? So the price is basically moving between about 1,000 to 1,200 pips in a range of about a year and a half. So if we were to take this price chart and we were to take it all the way up to here, we basically would hit about let's just put 1,000 pips, okay? And we're going to see how much structure the price actually has by using 1,000 pip, right? From this low where price broke out from that October to November, where we saw price actually see that high. And we're going to take this into consideration later, you guys, but let's just look at where price consistently was showing a lot of support levels in this 1,000 pip range, right? So we have one test of the high, two tests of the high, three tests of the high, four, and then we have five, okay? So this is obviously between 2017 and 2018, you guys. So what happens is that they made this low, or price formed this structure low to be able to keep on hitting off these highs, to work off this area for a certain amount of time, right? This was showing that if price was, if we are in a surplus economy, right, if we're having all of these very, very high interest, very high impactful news that's going, oops, sorry about that, you guys. Looked like something happened to the connector for a second. All right, back on. So you guys, exactly what I was trying to say is that the price comes from one area, tries to retest these areas. It's in a consolidation area, right? The market, like I said before, trends 50% of the time and it consolidates 50% of the time. So from a micro perspective, we could have saw that these were bullish and bearish trends, but essentially we're still in a consolidation period. So what we're going to probably see in price in due time is that first we're going to see price first move from one area of market price to the next. So what I mean by that is that we want to see this area be consistently a support or resistance area, and then what we're going to see is that we want to look for the support area, and we can see that the support area is right at this level between 108,500, right? So if we can see that price is at 108,500 and we can see that this is going to be the bottom and this is the top, now we can formulate where price will probably go towards, right? So the possibilities of price having this area being formulated where price comes into this high, test that 1200 or 1200, right? Comes down and then retests this low of 108,500 or 109, right? This is where we considerably will see price move to our next round, right? From between January to February, if price decides to break this minor area, right, of support, major area of support, where we're going to see price probably break this area in the near future due to having a lot of, like I said, there's a lot of impactful data that's been coming out, and especially if something goes wrong with Donald Trump not having a compatible relationship with the Fed chairman, or something comes into the markets in the near future, we can possibly see something stir up the economy that will make the dollar, right, have that more pressure to the downside. So as you guys can see that we had this huge run, right, this 250 pip run from where we were previously at that high to that low. So I want to show you guys exactly what we're working on with the percentage of how the market value works, okay? So as you guys can see, this is a 250 pip run from this high to where we are right now, right? A little, right? So what we're looking for is that the same thing happen once again, where price does another 250 pips, which can possibly be a little higher, which will deal between 108,500. So this is where we're going to see possibly a retrace to the high, have that test, try to obviously induce those buyers one more time into thinking this is the level of support that it's going to be functional, right? And then coming back and retracing and stopping out those traders and retesting that structure low, where price will be able to now define as a bearish structure, right? So do I believe that price will be able to break this level of support? That is still up in the air, right? Because I'm not really looking for exactly how price will move for a couple months in advance. I'm looking for it probably for a couple weeks to 1 month, because then I can be able to make a understanding and have a strategy that's going to be amplified. Because at the end of the day, the market can do whatever, but we're going to go off what price usually likes to do. It tries to break certain zones and test old areas of support and resistance. And as you guys can see, that market price did it 1, 2, 3 times, and then we're going to see probably the 4th time right here. So we're going to definitely be short coming into the new year with the USD Japanese yen. And as well, if we are short with the USD Japanese yen, we're going to be seeing a lot of buy orders, especially we're going to see a lot of buy in the Great Britain pound. Obviously, we can see that the gold has been shooting up like crazy, which is going to be a great thing for price to be able to find where we're going to be able to see those highs again, right? So as you can see, that gold has been now seeing that huge bullish upside movement, right? And then obviously we might see a little retracement. Like we said, we might see that retracement to the USD Japanese yen where the price might go back to this level. We might see the same thing happen with gold. Gold price might go back and retrace and then make that flag pattern, right? Consolidate and then come up to the upside, testing this 1300 level where we want to see that's where price will want to drive to, right? So this will be a very, very big factor of where price will possibly be going for the early 2019. And obviously we're going to have to adapt and go from there, right? So as we can see that this Japanese yen chart is looking pretty self-explanatory. Things are looking really good. And if you guys have any questions at this time, please feel free to put in the comments, and I'll gladly answer your questions on where price might be going for other pairs as well. So I wanted to say that is the most essential pair that I'm looking at right now, that I'm going to be following heavily, especially the Great Britain pound as well. I'm going to be seeing that upside momentum just because I can see that price is consolidating between, there's two structures that price will go into at this moment for the Great Britain pound. We can see that price is either going to make a 500 pip run, but it depends on where price is wanting to decide. If it wants to come back and retest these previous structure lows, or if it wants to break out to the upside and trap these sellers before moving up to previous highs. So I drew this out previous to this live stream so I could show you guys how price will possibly be going into the near future with the USD, US dollar, and the USD Great Britain pound US dollar as well. So now that we just have that $500 pip, or 500 pips going into there, we have one here, we have one there. Now we're going to be able to formulate where price is going to be. So I want to show you guys exactly what I mean about the 1,000 pip strategy that I'm telling you guys. So when Brexit happened, right, it broke a huge level of support, right, which was about 1,000 pip move, right, from here to this high to this low. It was about 1,000 pips, right? So this 1,000 pips was formulated, and then we had a consolidation area outside of that, which was another 1,000 pips, and then we had a 500 pip run, and then we had a 500 pip run, and then another 1,000 pip run. So I'm telling you guys that these 1,000 to 500 pip, or basically these intervals between 1,000 pip structure and 250 pip intervals, they have this thing where the market works in between these. So if we can be able to calculate what the 1,000 pip structure is going to be, and then be able to formulate where price is going to be inside that, we can have a bigger and better structure, right? It's kind of like having an algorithm like Raphael has, because now that we understand how that price is going to move, and we know that the certain momentum and the daily range, and also the not just the daily range but the structure range, which is the 1,000 pips, now we can basically structure how price is going to be able to formulate, and that's where we can be able to make some serious gains, right? So I wanted to say one more thing on this percentage on the pips, is that now that we have that understanding of where price and how prices run, I want to show you guys one more time where we're going to see price come into the high. So we'll take this swing high and we'll go once again to this low, and we'll see that's about 900, and we'll say like 900 or 880 pips, right? So a little lower than we expected, but price, if we were to draw price out to 1,000 pips one more time, we can now formulate if price is going to go into the downside and then retest, right, like we talked about earlier, or is price going to come into this consolidation area and break to the high. So now that we have that range, this range that will be able to formulate where price is going to be, we can define how market structure will determine in the near future with price. So it's really awesome stuff on how we can be able to dissect price just having these pip intervals in these. Whoops, looked like sorry guys, looked like I cut out one more time. Interesting. So I want to show you guys one more thing. I think that price is going to obviously come down, maybe retest these lows, and then consolidate before we see an upside momentum where price will then start to have highs for 2019, right? So from there, I think that we're going to definitely be looking at different perspectives of price throughout the week. Tomorrow I'm going to try to do a full analysis on the pip ranges. I'm going to set that out and have that already established for you guys. So it's going to be probably for about 3 to 5 months of how these percentages work. So you'll be able to basically take notes and understanding how these 1,000 pip ranges or 1,000 pip structures and these 250 pip intervals affect the market, and how that they are very in sync on all different price charts and everything like that. So thank you guys for being here. I really appreciate it. This is not going to be a very, very long video, just because I do have also family that I'm going to be going to lunch with earlier of the afternoon. So I will be able to get off this live stream a little early today. My apologies, you guys, but I do want to also talk about before I leave what we're going to see for the Bitcoin and what Bitcoin is going to be doing in the near future, right? So if we see the dollar is possibly going to go lower and have that as a possible, downwards, we're going to see a lot of investors have a safe haven, which they know that Bitcoin is possibly going to be one of those safe havens. So we might see an upside momentum in the early of 2019. And I don't say that it's going to be sustainable. We're going to see these highs again at 11,000, but we possibly might see even it hit 6,500, which could be a high factor of structure, and then consolidate. And then possibly if we do see an upside, it might hit 7,000 and then obviously continue that downtrend. But if we do see price coming into that direction, we possibly might see the market go to the upside for at least a couple months before we see the dollar recorrect itself and then start to head to the upside. Because I really believe that the dollar is just going to correct itself for about 6 months, maybe a little longer than that, but it's going to be definitely a very, very nice trade to be taking, especially if we're seeing Bitcoin and we see the cryptos as well going to the upside as a safe haven for a lot of investors that want to be able to have their books diversified, right? So that's a last thing I'm going to be talking about. I'm going to be in the Discord a little later, you guys, to be able to go over some market material. I'm going to also map out, like I said once again, you guys, the 1,000 pip range. I'm going to be able to have that available for you guys, and then also look at the structures in between where price will be able to define how these levels work and be able to get more in depth with that later on. So Merry Christmas, you guys. Thank you so much for being on this live stream today, and I really appreciate you guys as being so determined and so willing to learn and learning a lot of these market materials, and just being able to take the time out of your day, even on Christmas. It shows a lot about character. So I really appreciate that, and I will be talking to you guys tomorrow on the live stream, and have a Merry Christmas. All right, guys, take care.